What's up, guys? Been a minute since I last talked to y'all. Gonna go over this slingshot setup that I had yesterday that I ran over with my little brother and that I walked him through from beginning to end. And I think that if I explain, his perspective and how he was going about this with the wrong approach, and then show you guys how I executed the true approach, will help you guys out because maybe some of you guys are making the same mistake. Okay, so overall, right here, we have a first reaction that catches our eye right here. This whole move right here, these guys, this is our first reaction coming off, setting us up for some engineered liquidity, right? So if we look at the higher time frame, overall we were bearish during this point. Using my standard deviation, I mentioned in my other videos how I use it and how I get my overall. It helps with my bias and trends. I had a 3-hour manipulation leg up here, dragged it down, and currently at this time we were still pushing down lower to come down here. So overall I was bearish, and we were having these fair value gaps here. We've already touched into it there. And I'm sure there was a couple other things, but I want to kind of just go over the structure here with this to kind of help you guys out. So, got a text from my little brother at this time. He was telling me, hey, I think we got a good slingshot set up forming, yada yada. And I go look on my phone or go log on the chart and go check and see, if he's looking at a valid setup. And I notice that we had a unfilled 5-minute inverse fair value gap here. And then at the same time, because remember, he's down here thinking we're getting a solid slingshot set up for bearish, and it does look good. We get a first reaction, liquidity sweep, we get a break of structure, right? But he did not see this 3-minute inverse fair value gap where the CE is paired to the T with our 1.11. And, I've shown you guys a million examples. I've told you guys a million times too as well. When you have your inverse fair value gaps or fair value gap CEs paired with either one of these two or down here with these two, the probability of that trade jumps up tremendously. And the win rate's even better. And the top tick is also a lot better too as well. So when my little brother sent me that text and I forwarded to him that, we have a 3-minute inverse fair value gap above that we still have to also fill. I told him that I was waiting on a double confirmation. And so here with this double confirmation, like I've been communicating with you guys in the Discord, I'm looking for bigger moves to target all the way across 81 and working my way up to getting across 243 and, 729, so on and so forth. And here, I was looking for another slingshot structure. And, there's times where slingshot moves really, really fast and really tight. And if you look closely here, we have a first reaction come down. Then we have a liquidity sweep. It takes out this high here. And then, it's chopping around. Then we got a really strong close down bearish. And we also got a rejection block off these here and this wick here that is paired up in our go back area or swing zone. So then I just put my order, once this bearish candle closed, I put my sell order right here at the one high. And I was targeting to go across. But then initially after all this chop and then this run back up here, I didn't really want to risk it and wait all the way for it to go across. I was also at work during this time. So then came across, hit TP at EQ, right? So the main points that you guys need to take from this is when you're in your entries, especially with these bigger moves in trading New York, you got to keep in mind the bigger picture and how price is moving, right? Not only is it bouncing back and forth in a range here, but we had an unfilled inverse fair value gap here that we needed to fill. And that is one of the biggest components or inbound or just concepts in this slingshot strategy is having an inverse fair value gap paired with the CE, or the CE paired with one of the levels. And another big thing that I want to go over here that really confirmed that we were going to go low, or at least that this trade was going to hit, is we had this break of structure here. And the main key point, which a lot of you guys I think are messing up also, is you're not waiting for these candles to close past the lows. You know, if the body did not close past this, I don't care if the wick came all the way down here and then the body closed up here. That is not a valid break of structure for me. The body needs to close past the other body. You know, daily bias, I talk about the wicks, but here with the smaller time frames, you know, you could work with it, you know. And then going over today's setup. Overall, I knew we were bullish. We had this 4-hour fair value gap up here. That was my overall kind of pull, or helped with my bias, or confirm my bias, I guess you would say. All right, he's not deleting. Trying to give a clear screen. Well, they're not getting red. But we had this fair value gap up here, starting there. And we had a very strong close on the 4-hour. When I was initially looking at my trade, we had like 30 minutes left in this 4-hour candle. And, you know, as long as it was going to close green, I was good to go. If you look at the, where's it at, 30-minute. The 30-minute has an inverse fair value gap paired with our 1.11 right here. So then, once again, I was looking for the confirmation of the break of structure. You know, if it did not close past this body right here, or even double confirmation, you know, for it, even extra confirmation with the wick, you know, that's a true break of structure. That's exactly what we're looking for. The body didn't close below those lines. So then I waited for the retracement. You know, this is the patience, guys. This is what you got to wait. You got to wait for it to close. You got to wait for it to come back down. I waited for the double confirmation. The first setup I mentioned in the Discord, we had the first reaction, liquidity sweep here. We didn't get the true break of structure, and this is a prime example of how it continues to reverse. Didn't get the break of structure there, and I entered in. I could have took profit at EQ, but like I said before, you know, I'm going for these bigger moves. Came back down, got stop break even here. Waited for price, took a minute off the charts, came back, looked for more structure. We then got another liquidity sweep, a good first reaction, reevaluating kind of the analysis here in the structure. Came up, we had a good strong move here. We're reacting off this one minute fair value gap. We come down, we failure to close lower down here. So now this 1 minute fair value gap's invalid. What do? We come up, we close past this high. Boom, we got a break of structure right there ready to go. And then if we look back over here, we had a 1 minute inverse fair value gap paired, or 1 minute inverse fair value gap in between the swing zone. And the CEs were pretty close to each other. So, you know, with the inverse fair value gaps, I mentioned in some older videos, I put my order right at the top of it because sometimes it just taps into it. And that's exactly what it did. And I didn't target across the 81. I targeted at this fair value gap here that was unfilled, just to guarantee myself profit. And if you look at that, it would have edged the shit out of me if I was trying to go across, you know. So with these bigger moves that I'm trying to catch, you know, I've learned, you know, if there is an imbalance up here that's close to it, you know, it's different if this was a big 1 minute inverse or 1 minute fair value gap and we had a whole imbalance through here. But no, the imbalance was there. So I'm going to go where guaranteed profit's at, and that's where I would get, not guaranteed, but, you know, solidified profit there, true profit, because it would not be true if it decided to run past, because then it would inverse it. All right, so kind of just to run down the main ideas here. Back in the first trade, we're making sure that our imbalances are filled before we enter, and then reminding ourselves with the candle closure on where these bodies close to confirm our break of structure, right? Here, with the other one, the setup from today, main things you could take from it is, you know, your stop loss, having that break even so that you allow yourself another opportunity like this to trade again. And understanding the take profit up here with the fair value gap if you're going for bigger moves and not targeting all the way across if there isn't an imbalance inside of it. Okay? And the break of structure here with the candle closure. Let me know if you guys got any questions.